So if you're looking to buy a house here in the UK with a mortgage and you want to know how much you need to earn to be able to buy a house with a mortgage here in the UK, all you need to do is to take the purchase price of the property minus 10%, because you would usually need to put down a deposit of 10%. So that means you must save 10% of the value of the property, that's the purchase price of the property. So you minus 10%. So whatever is left after minusing 10% is how much you will need to borrow from the bank. Now take that and divide it by 4.5. So whatever you get is what you would need to be earning annually to be able to buy that particular house. Now, let me give you an example. So let's say we want to buy this beautiful property on my screen right now for 300k. Now, the amount you need to buy a 300k house in the UK with a mortgage would depend on various factors, including the mortgage terms, your down payment, and your financial situation. You see, if you are buying a house here in the UK with a mortgage as a first-time buyer, the amount you'll be able to borrow from the bank will depend on your financial situation. That's if you have any debt or how many dependents you have that you're catering for financially. And if you're taking the mortgage out for a long or short term, can also impact how much the bank will be willing to borrow you or your affordability. And the down payment. So the down payment is also known as your deposit. So if you put a 10% deposit, you will be borrowing more, and that might mean you might not pay for that more money you want to borrow to pay for the rest of the house you're buying. That's the mortgage you're taking out. It might mean you might not be able to afford the monthly repayment. But if you put like a 50% down payment, obviously the bank will still have to go through your financial situation, even if you're putting a large deposit such as 50%. But with a 50% down payment, that means you're borrowing less from the bank. So basically your mortgage repayments would be lower than if you're borrowing more than 50% of the value of the property. I don't know if you get what I'm trying to explain. In this video, we'll just assume that we're buying this house with a mortgage and we don't have any debt, and our down payment is like 10%, and we are taking out the mortgage for 25 years, which is the typical amount of time people here in the UK would always take out a mortgage for. You can always take out the mortgage for 30 years, 35 years. I think there was an article I read of recent where the UK government is trying to push for a longer mortgage term of 40 years. I feel that is ridiculous, because that would mean that you'll be paying for a mortgage all through your adult life. And you can also take out a mortgage for a shorter mortgage term, like maybe 10 years or 20 years. It just depends on your financial situation. In this video, we'll just assume that we're buying a 300k house and we're taking out a mortgage for 25 years and we're fixing it for 5 years with the current interest rate. Thank God interest rates are going low. So if you don't know, there was actually a mortgage crisis, or would I say a housing crisis, inflation crisis, financial crisis here in the UK, where interest rates on mortgages, loans were just ridiculously high, but now they are coming down. So this is a good time if you're looking to get on the property ladder. It's a good time to start looking for the house you want to buy. Best believe the era of having a mortgage for 1%, 2% is long gone. We will not see that in a very, very long time to come. I can tell you that we will not see the era of 1% mortgage in the next 3 to 4 years. So if you're looking to buy a house in the next 2 years or 3 years, I'm thinking you'll get a 1% interest mortgage, I think you need to wake up from your slumber, because that era is long overdue. I think 1% mortgage would be a reality if, let's say, you're a multimillionaire and then you have, so there's something here in the UK where you have a chunk of money you put with the bank for like security or something like that, and they can give you a mortgage for a ridiculous percentage. I've forgotten what that is called, but you can go and read it. Basically, you will just have your bank account and you put like maybe £1 million, and then the bank can borrow you like 500k to buy a house, and then you'll be paying back the bank monthly because it's a mortgage, and then they can give you a percentage of 2% or 1%. I mean, those ones are for ridiculously rich people, because they know that if anything go wrong, you have money they can just use to pay back the mortgage on your behalf. So basically that's that for that. But I can see interest rates on mortgages going as low as 3%, 2.5%, but 1%, I don't think that is a possibility anytime soon, considering the UK is just recovering from an economic downturn. So I digress, back to the video. Typically, if you are buying a house in the UK with a mortgage, you will need to make a down payment on the house. And a typical down payment, banks here in the UK would usually ask from first-time buyers before they can give them a loan, is usually around 5% to 20% of the property's value. For the sake of this video, let's assume that the person buying our 300k house will put a down payment which would be £30,000. Now, after the down payment, you will need a mortgage loan to cover the remaining cost of the house. In this case, that would be £270,000 that you'll be borrowing from the bank to pay off whoever you're buying the house from. So you'll be borrowing £270,000. Now, with this information, we can now go on to calculate how much you would need to earn to be able to get a loan of 270k from the bank. Now, in the UK, lenders, aka banks here in the UK, would often use a rule of thumb that your monthly mortgage repayment should not exceed a certain percentage of your gross monthly income. Basically, this rule of thumb is to ensure that you can afford the monthly mortgage repayments, and the specific percentage can vary, but it is commonly around 28% to 31% of your gross monthly income. Now, having this in mind, what you want to do is to take the 270k you need and divide it by 4.5, which will give you £60,000. This means you will need to earn an annual salary of £60,000 to afford a house of 300k here in the UK with a mortgage. Now, why you would divide the 270k with 4.5 is because based on the rule of thumb I mentioned earlier in this video, they would usually take your salary and times it by 4 or 4.5. Some banks can even be generous to times it by 5. But usually they will times your income with 4.5. So that's why we've taken the money you will need to borrow from the bank and divided by 4.5 so that you will know what you need to be earning to buy a house of 300k. Now, do not be frightened by this figure. Not a lot of people earn £60,000 annually here in the UK. But the good thing is that there's something called a joint mortgage. So basically, a joint mortgage means that you and your partner or your husband or your wife or any of your family member or a friend can come together, put your money together and buy a house together. So basically, if one person is earning 20k and the other person is earning 40k yearly, so 20k yearly and 40k yearly, both of you can come together and buy a house that is worth £300,000. And if you're earning 30k and you know someone who is willing to buy a house with you that is earning 30k, both of you can come together and buy a house that is worth 300k. So basically, if you're not earning up to £60,000 annually and you really want to buy a house that is worth 300k, all I need to do is to get someone who is willing to partner with you to buy a house and take out a joint mortgage in both of your names and have equal share of the house or a certain percentage of the share of the house, depending on the amount each person is bringing on the table, and then both of you can buy a house together. When my husband and I bought our house, we actually took out a joint mortgage because we took out the mortgage together. We put our income together to be able to take the mortgage. So we both are responsible for the mortgage we took out and we both own the property we bought. With this, we have come to the end of this particular video. In the next video I'll be uploading, I will talk about all the fees associated to buying a property here in the UK. From the hidden cost to the more visible cost, I will talk about it. Now, in the meantime, if you want to know the hidden cost associated to we buying our house here in the UK, watch the video on your screen right now.